Today is our second series of free money. Okay, and it's just a very catchy word. It's free, and free money. Who doesn't want free money? But the part one, we talked about how free money impacted by your tax planning, and then part two, which is today, and I want to talk about free money by being efficient in your business. And this is particularly important. It doesn't matter what business you are in, and you want that efficiency in your business in order to become uh, better and bigger and accomplish your goals in your business. Then the third part of this free money, we will talk about free money as grant and a government assistance that would come in, and that would be next Saturday. So I have that scheduled 3 sections for free money, and today we're focusing on efficiency. I want to kind of talk to you about this Biden tax planning because today and the CNN and the Associated Press and the Fox News, they have already decided who is the president starting from next year. So his proposal, Biden's proposal, will be important because that become part of the tax planning that you really need to think about. And his proposal does change a lot of things. And I just want to quickly run down for you and to understand the spirit of it. And you want to know that his spirit of changes on taxes is to tax people who has more than $400,000 a year income heavier. So that's the spirit of it. So for business, he wants to tax um, the more bigger business heavier. I will show you how that works. And here he said that if you make more than 400,000, he's raising the tax rate from 37, which was dropped by Trump, to 39.6%. So I want to tell you that, and Trump's presidency, he had done a huge good for people are big businesses, and none of you belongs to that category. I will just tell you, and you don't belong. And in reality, if you haven't really done tax planning with community CPA firms, and I'm so sure you're paying more taxes out there than what you were before, but our clients, we made sure it doesn't, our clients, we always tell our client that it doesn't really matter which president or party is on board and doing what kind of tax calculations there. What it is important is that you understand it and you plan accordingly. That is why as a tax planning person, I consider myself planning taxes, and I'm not a financial planner. That's why I always look at right now, what's your tax saving going to be? And I do not talk like financial planner telling you that save $1 and then you will get $1 million some 50 years later because of your good habit of saving. Like Good Dad and Poor Dad, Rich Dad, Poor Dad is the same theory. And he want you to save Starbucks coffee, $3, then you can become millionaire just because you don't drink coffee. But I am a heavy drinker on coffee, so I don't save that money. But my focus is really today. And today, it is actually a education for all taxpayers that, and your taxes, it is really very fluid. You're just going to do what's here today, and tomorrow things changing and it's not going to be the same. So understand Biden's tax plan would help you to navigate your next 4 years, and then whatever changes coming in, and as long as you're relying on someone like Ying or a community CPA, you know you're covered. And I obviously do not serve big shots, and those people are KPMG, McLaren Poland's candidates. They are their clients, but people who are following me are the ones that really need the knowledge. This is where I show the Biden's tax planning, and we are actually servicing the small businesses whose annual net profit is under 50 million. And So there's a lot of talk about expanded child care credit, child tax credit, and also home buyer, first time home buyer. Biden also have a plan. And then Biden also want to raise corporation taxes from 21% to 28%, and want to, make sure that the people who makes more than $1 million in a year, their capital gain is not 20, is 39.6. So those are a very targeted people and or organization. And frankly speaking, if I am wealthy like that, I do not mind to contribute to the overall society and paying more taxes. I am totally fine. And I just think that Biden's plan is there to guide, to get more revenue for the country and guide everybody into a place where we all live comfortably. And that's just how I see his tax plan. And I want you to look into my part one, because I talked about the taxes. And I want to say that your 2020 taxes that already planned by our firm, that stays the same. That is a good one. And you really want to take advantage of 2020. And if you did not do tax planning with community CPA and you made money or you lost money in 2020, you're losing a lot. You are giving up your free money. That's what you're doing. And 2021, however, will be different because, President-elect Biden, and he already have a plan for taxes, and his tax plan was very clear, and you see exactly what he's trying to accomplish. And Trump's plan is also very clear. You see exactly what he is trying to accomplish. It is obviously not the same thing. So make sure that you understand it and you work on your particular situation, especially, and with, of course, taking into the big situation in consideration, but you want to tailor that into your needs. And plan your taxes with community CPA, and always pay your tax bills with efficiency. In the when I talk about tax efficiency, I meant to say that your tax dollar compared to your total earning, and that ratio is low. So you pay 39.6% taxes means for every $100 you make, you pay $39.60. So that's your tax rate. So tax efficiency just means that we are lowering that rate through proper planning. Okay. And so that's my part one. But efficiency means what? Efficiency means that your tax dollar versus your total earning, and your ratio is small. So let's say you actually had a $500,000 gain, but with tax planning, you are able to lower that to $250,000. Then there, you got tax efficiency and you got free money. And the tax planning is a concept of being efficient, but it is not really a concept of saying doing improper handling of taxes. And folks, if you know that the tax system are designed and so well in the country like United America, and you don't need to do anything that is not right. You just need to find the right firm, the right person to guide you properly. And we have a client. She did businesses. She did a big restaurant in this big city for what? She bought the restaurant and she worked there for about 9 years. And, she really made all the 9 years. She really just saved about $500,000 into her personal wealth, and is from the business. Then one day IRS come and the audit went on for another 5 years, and so she actually not only paid all of her saving back, and she also have to have arrange installment to pay more. And I'm not saying that she did something wrong, but I am saying that if you don't have things that put in place properly, even though you did spend that money, but you have no receipts, it is not IRS's job to say that, oh yeah, I know you lost your receipt, so we're not going to take away that expenses, and we know that your restaurant has to drive, so your gas expenses is correct. No, IRS will say that we know your business is needing to drive a car. You should have gas expenses, but because you don't have receipts, so we are not allowing you to deduct that. Okay, so that is the position when you go through the government compliance. So you really want to make sure that what you do is properly done. And so when that comes, boy, you can sleep and you can just know that you are in good hands. And why not? Why can't we live a life like that? And why do we have to, in the Chinese slang, we call that to steal dogs and cats? And why? And you just really want to be above the board and doing it right. So that is the efficiency. That's why we're talking about efficiency. Efficiency creates saving. That exactly is the money you're looking for. So very quickly, I want you to follow an example with me. This is again related to why it is so important to have that efficiency in your business. And this is the tax table for a company prior to Trump's time. Before Trump became president in 2016, and our taxes is this way. But I want you to see, I want you to look at a table I just created for you to view, because Trump passed the Job Act, which made the corporation tax rate down to 21%. Many of clients that I know, and you know that so well, because with the kind of money you're making, the 21% is offered you a lot of tax saving. And Biden's proposal right now is to raise the taxes to 28%. So I want you to follow me with this number. So let's say if you are a business making $0 to 50,000 net profit. I'm talking about taxable income. You might be making $1 million sales, but your net profit taxable income is 50,000. And before Trump's time, the taxes is zero. You don't pay any taxes. But Trump's time, because it's a flat 21%, so you pay 10,500. And now Biden's proposal says that you will pay 14,000. So let's move down to this line. With your taxable income ended at 335,000, and in the olden days it was 22,000 taxes, but the Trump's time it will become 70,000, and then the Biden's time is 93,000. Okay, obviously this flat rate had raised the corporation, but look at people who make the big dollars, like the airlines and the people who are Amazons and the people like that, and they have $18 million taxable income. And in the old time, they would pay $5.1 million taxes, but in Trump's time, they pay 3.8. And in Biden's time, I sort of caught up, is 5.1. Okay, so now, and put the politics aside, we're just talking about tax rate. So you can tell that Trump's policy really largely benefiting people who are ultra wealthy, because if you are small businesses and you didn't even make $50,000 profit, and you know that you're paying taxes, right? So this is where with this understanding, folks, this comes the tax planning. This is where we will say that to have free money in your business, you will reduce taxable income. Am I right? And you will reduce expenses and increase productivity. So when I say reduce taxable income, I'm not saying that you had sales and put part of your sale in your pocket, don't tell anybody. No, reduce taxable income has so many ways to do it other than direct relationship to your bank deposit. What you deposited in the bank has nothing to do with taxable income. I wouldn't say nothing to do, doesn't have a direct one-on-one relationship with what deposited in your bank. So what's important to know is that taxable income that can be manipulated. This is such a negative word to say, but can be planned out, and by December 31st of 2020, and we can have what we call accounting loss. we can have what we called tax loss. It's not a real loss. And simple example, if you have a business and you made a $20,000 gain, okay, in 2020, but you decided business is going well even during the pandemic time. So you're going to spend $200,000 to renovate your business and making the shop look great. And when you do that, what happens? When you do that, you spend the 200,000, and that 200,000 can come in one day as expenses for you, and then right away you had $180,000 losses, right? So that loss will be used to get you refund in 2020, because CARES Act had given something called net operating loss carry back to 5 years before 2020. And so if you made $180,000 profit in 2015 and you paid $50,000 taxes, do you know that means that you are getting $50,000 back because of this plan? Okay, free money. And I go back to my point. That is your free money when you plan your taxes. Of course, I'm giving you very easy examples, and you are like, that doesn't apply to me. You don't know. If you don't get into these kind of professional conversations with professionals, how do you know you have that opportunity or not? Right? And you're good with your business. That doesn't mean you have to be good with taxes. That's why I'm here. That's why you're listening to me. That's because we have the expertise to help you, right? So reducing taxable income, that's your free money through tax planning. Reducing expenses, increase productivity, that is for you to engage a business consultant, someone who understands your business, to come around, take a fresh look. So the next half an hour, I'm going to give you examples on the different industry, and real examples that I lived through. Okay, and I want to give you those examples so that you understand what can be done and what has been done with other businesses. So really kind of opening up your thought about your own business. So now let's go to the first industry I have in mind, which is the restaurant. So a lot of restaurant owners started restaurant really easy because they are good with cooking. So they got in, they're good with cooking, and they got clients, they're running a restaurant. But a lot of those restaurants, especially the small business owners, because you are good with dishes doesn't mean you are good with the business. It just does not equal. Some people happen to be both, but they're not. In my first book I wrote, I call these people who knows how to cook, started restaurant, they're from land of hands. So they know how to do it. But in a real business world, in order you to get efficiency out there, to really make money, have free money for yourself, and you need people from land of heart and also land of head. And the people from land of heart are the ones that just out there with a big smile and would get customer coming in because they felt the compassion. The people from land of head are the people like Donald Trump. Donald Trump is typically a person from land of head because everything he does is for business. He make money out of business, and he think through the bottom line, and he made money. Okay. No comments about how a person makes money, but the reality is that he did make money, right? That is a typical of calculated personality. And I'll say that in a successful business, you must have people from these three kind of angles: land of hand, expert; land of heart, compassionate; and land of head, calculated. Okay, so in the restaurant business, I'll give you example of a free money. And this restaurant is a client, and the first one, when we look at their income statement, balance sheet, I noticed that the wages compared to the sales is just high. In my opinion, it was higher by two bodies. It's almost like there's two people she should not hire, but it's in there. So I actually visited the restaurant. When I went to visit the restaurant, and I realized that the front of the restaurant, this is more like a fast food restaurant, kind of McDonald's kind of restaurant. So things should go really fast in the restaurant. I noticed that the front and the things are going that way. Customer coming in and out, and the cashier is busy and always, putting in orders. And but behind the cashier and where the food coming in, between the window of the food and the kitchen of the food is literally a distance you have to have a rollerblade on. It is a long hallway all the way to the end. That's where they can install the ventilation fans, and they can do all these cookings out there. And in the middle, it's just not a place to do that. So the installation went to the back of the room, and they are wasting running time right there between food and the window and to the customer. So we estimated that running time, that literally is a 1.5 people. One person has to stand on the cashier, call up the order to the back, and when the back people would have to you know make sure that they hear it, and then when food is cooked, they have to run over to the front to give to the cashier. So this is where the efficiency get lost. There was no efficiency. We overpaid 2 people, and the food can run from the back to the front if there's anything small. Oh, we forgot a lemon. And then it's another run to the back and bring the ingredients in. So this is where that didn't work. So if you could cure that efficiency, so we gave a proposal. What happened is the restaurant is growing really well. So there are so many locations out there for them. So what we did is we spent money to carve out part of the business. So the back of the business become a preparation center for all of the small restaurants. And then we moved the kitchen closer. And so this particular restaurant start having that efficiency. So average saving every year was close to $35,000. There you go. If you don't look at the business in that angle, and you don't really see where the money went, you're probably just gonna think that, well, I don't, obviously we work really hard. What are you talking about? And my people, they're busy, they're running around, and they obviously are not standing there doing nothing. But busy doesn't mean efficient. Busy could be inefficiently busy. And that even worse, because that will cost you to pay more on labor cost. So for a business is a bad news. So now we know, and that is one way, and the space utilization. So I want to use this example to give you one efficiency thought. Space utilization is a largely forgotten. Nobody really pay attention to that. And space utilization doesn't just exist in the restaurant. It also exists in any other businesses as well. And you want to look at the space and to make sure it is efficient. You know how sometimes we would come across a situation where the landlord was trying to rent the space out, but whoever goes into that space loses. Like it's kind of a bad space, like no business was ever successful, and they go in, they close. So people wonder why. But a lot of time, if you look at it, it is all related to the space utilization. Because a lot of times when the new tenant come in, they tend to do the same business because all the equipment, everything is still there. But they didn't realize the old setup is not good with the efficiency. So when you rent a place to do business, or when you are running your business, you felt like, we're all busy, but we're not making it. Maybe that is what you are looking for, space efficiency. So that's my first point of free money for efficiency, space. Number 2, efficiency on inventory. This again, and there are several things about inventory. In some of the businesses, the inventory is not forever. And if you're in the restaurant business or in the grocery store, you know that your stuff expires, right? So to have that inventory turnover get sold quickly and replenish with new ones, that's become really important. And I want you to remember this formula. The more inventory you have on shelf, the more taxes you pay. And hear me again. The more inventory you have on shelf, the more taxes you pay. So the idea is to reduce your inventory to the minimum you have. So if you have a space where you have a big basement, okay, and you put all your inventory down in the basement, and upstairs you're selling your things to your customer, but the basement was always storage. And in that particular setting, a lot of people are going for that. And in that particular setting, your inventory efficiency is very low because you don't even display your inventories to the customer. They can't even buy it. As you have to go grab it upstairs and see who they can buy your inventory. So the ideal for small businesses is to turn every inch of your space where you display inventory into retail space. Let people walk in there to get inventory so your inventory can turn faster. You don't store them. And the lower your inventory, the less taxes you pay. Okay. And so with that, talk about inventory storage, inventory write-off. And in the businesses where you can save your inventory, you need to write them off. They should not be on your book. And we have a Christmas a novelty shop and who are our our client. And with Christmas come around, and there's always new merchandise coming to the market. And what you had last year for Christmas just out of date. It just go out of date. And you like it or not, and you save the same Christmas decoration to next year, it may not sell. And year after year, you become what? You become a storage of old Christmas items. Then you will try to sell the old ones, and you're just gonna stop your inventory turning, and you're gonna make your store look centuries old. And so those are bad practices. So what should happen is even Christmas decoration expires, and you need to write them off. You need to sell them. And since you are going to write them off, so you're not counting them to make a full price range like you use. So after Christmas, do a discount sale so hard that people cannot resist to not come in. Then sell all your inventory, because that's the ways to run your inventory efficiently. Remember what I said, the more inventory you have, the more taxes you pay. Okay, so that's where I want to bring your realization. You can write down your inventory. And what else about inventory? And the inventory purchase. And when you buy inventory, maybe you can pay inventory 30 days, 60 days, 90 days out. Okay, and it is largely depends on what kind of tax form you're filing. And that 30 days, 60 days, 90 days could mean very different things. For example, if you are on cash basis when you report taxes, so whatever money you receive in your cash drawer in your POS system, and you report as income. And whatever check you paid for your expenses, you report them as expense. And remember, and you are not going to be able to deduct those inventory you bought and you haven't paid in your year tax return, because you have 60 days, 90 days to pay. You are paying them in March of next year. So be aware of that. You want to be able to write down your cost of goods sold, right? You want your inventory to be sold knowing the inventory price, then your sales minus your inventory price cost, and then you can pay taxes properly. Imagine all of you sold and you don't have anything to deduct, right? So inventory payment method should be in line with your business accounting method. Otherwise, it didn't work. So if you're in retail business and you report taxes on cash base, I ask you why. And are you out of your mind? So that was part of the tax planning. So when we do tax planning, we consider that. But I just want you to remember increasing your efficiency, getting free dollar for your business, and you need to know to manage your inventory. The higher the inventory, the higher taxes you pay. Number 3, okay? So this one is about cost of goods sold. And the cost of goods sold and the inventory are really kind of hands on hand, right? Because you buy inventory for $5 and you sold it. You bought for $5, you sold it for $12. Then your net profit is your $12 minus that inventory. So at this time, the inventory turned into cost of goods sold, right? So you take that $5, you do 12 minus 5, then you got $7 gross profit. And after you subtract your rent, utility, you got a $3 taxable income, so you pay taxes. So cost of goods sold is the inventory that turned into sold item. That's why it is called cost of good that got sold, cost of goods sold. Okay, so in this particular example, I am talking about manufacturers. So let's say if you open up a you know, cheese factory, let's say, making cheese, okay, and you have the milk, everything. That's your cost, and you also have your factory. You have your workshop temperature to a certain level. You have your machine that cure the milk for you, and so all of these overhead and sometimes and you think that, well, this factory, I produce one piece of cheese, and but my whole factory utility bill, it is more than this piece of cheese I produced. And in this particular instance, we need to allocate the factory utility to that piece of cheese. Okay, so your cost goods sold is not just material cost. Your cost goods sold can include the factory overhead, which you thought it is not related to your selling of cheese, but it is, because you have to have all of these utility together in order to produce the cheese. If your utility together should produce, if your full production is 10 cheese, but you only produced one, then you can allocate all of your 10 cheese equivalent utility cost to cost of goods sold. Because capacity of your workshop, of your manufacturers, of your whole process, that should be considered. It's not just the cost of the food. So the reason I give you this narrative, because some people in manufacturers, and they only know that to include, if they build a vacuum machine, they only include the nuts and bolts and all of these things in the vacuum machine, but they're not including the capacity of the workshop, the whole facility that made this one machine available to sell, and that is not in cost of goods sold, and it could be in cost of goods sold. And I want you to remember one other things. And your tax dollars, the more cost of goods sold you have, the less tax dollars you pay. Okay? Remember, I just said that the more inventory you have, the more tax you pay. But for cost of goods sold, the more you have in cost of goods sold, the less tax you pay. In other words, so your cost of goods sold reduces your sales, so your taxable income will be less. So allocation of cost of goods sold for facility cost, it is a real key for manufacturing to not overpay taxes, to have that free money for their operation. And we literally have done we literally have done a cases for a factory and who actually forgot to allocate any of their facility cost into their tax return. So they overpaid $250,000 taxes. And that is what we do. And we go back and communicate with IRS, getting IRS endorsement on the method of allocation, then go back and to change everything, get the refund back for the manufacturer. So that is my number 3. This is again, is operation, is business efficiency. You have to know where to look for these legitimate saving area in order you to get more income to have the free money otherwise you would not have. Okay, so my last one, which is, other than the space utilization, the inventory storage, cost goods sold, those are big items. And what about the professional service company? What about insurance agency? What about real estate agency? What about accounting firm, law firms, and a professional firm like that? What is the biggest ticket for efficiency? So what is the best way to have more free money available for those firms? The number one, the biggest ticket is time management. When I talk about time management, uh, it sounds really insignificant. What do you mean by that? Oh, you just want to make sure that we punch in the time clock, and we can't even be 1 minute late for lunch. No, that's not time management. Time management, it is a management of all the work you do from everybody in the company and know exactly what value in the work creates. So if everybody tracking on what they're doing in the day, then as a firm wide, you would know that what was done. And then you look at the time each person spent on that particular project, and you will know that who is efficient when they do 1 hour work, what they do, and who is inefficient when they do 1 hour work, what that person does. And that will give you the best understanding of who you hired and also the value you brought to your client. Because professional firm really, there you either get paid by client or you get paid by the third party. For example, on insurance company and insurance agency, they don't get paid by the customer they serve, but they get paid by the insurance because the customer pays on the premium, insurance gives them a cutback, right? So in direct way, you don't collect the money directly from your customer, but the customer pays to the premium, then you get paid for that. And with that, it is still a efficient way to figure out how is your agent are managing their time. And one big benefit out of this one is, how we all claim that we overworked. I overworked. And do you know how much time? A lot of people say to me that, oh, Ying, you work really hard. And I say, yes, I did work. I work really hard. And but I also have my time management tools. So I look at my own time, and I'll tell you that even though I'm in my office for 18 hours a day, and I probably only did less than 8 hours productive work. So the rest of the time, it is really me goofing around and talking to people, and or I don't even know how I use my time. I just know that I'm in the office for 18 hours. Okay, and it is a very important realization for me to know that okay, I worked 8 solid hours and I did this project. But the other hours I'm in the office, but I was doing something else less stressful, and it's just like I like to hang around. And imagine if that understanding is with every employees you have in your firm. So nobody would come out says that I am being exploited because I've been working too hard, and so they will know within their 8 hours time, how many hours is really contributed to a value to the client? How many hours is just us getting around and just having a good camaraderie, right? So it is all allowed, but we want that time management tool to come in so that we can objectively knowing what we did and not sentimentally feeling what we did. And that is a key for a professional service firm to arrive to that stage. As long as you can get there, and then there is no question about you can run the firm properly, because employees who are in the firm will be happy. They know that they work hard, but they also know the value they created. And for your client, they also will be happy because your billing to them is reasonable. And you did not bill them on the staff chatting with each other, and you're not billing them and it's so fluffy that they don't even understand why you spend 2 hours and only filling up a form, right? So all of that requires the professional firm to really being innovative about time management. And with COVID-19, so many professional firms are really farmed out. People are going away and they work from home or whatever happened. Some of the professional firms start moving people into subcontractor services because what's the point? They don't even come to the office anymore. They work from home. And all of these ways you're doing, and as long as you vet it through the professional opinions, making sure that it is a good way to go from employee to subcontractor. And I see where I sit, I see trends for people going into subcontractor services just because pandemic made it impossible to work all in the office. Once people are not in the office, a lot of these work lost the kind of supervision, lost the reason to be an employee, then naturally people become a subcontractor. That itself saves money for people who are subcontractor, also saves tax for the employer. So those are the things you want to look into, because once the person become a subcontractor, the time management become not important, because you will measure them by productivity, and you will tie payroll, not payroll, you'll tie payment directly with what they do, what they did, what they accomplished. But in the office, when people are working here, putting in their 8 hours a day, that's where the time management comes in. That would really make you save time, save money in your operation at the same time, and grow a really profitable firm. And I know I said it very general. I didn't even give you the tools. So how do I get there? And I'll tell you that we use a professional Thomson Reuters systems tool, and to really track on the project, track on staff's involvement, and track on clients' documentation. So we have a whole set of very expensive tools to help us to get there. But there's other professional firms, they didn't invest in the expensive tools, but they still find means to work on the time management. For example, I know a small law firm, just the paralegal and the lawyer, just two of them. And the way they are doing their time is that they simply document their time into their email. So they summarize their day in the email, then they send that to this to the paralegal's mailbox. So at the end of the month, and they summarize that. So small firm, you can do that, and you can see time management is actually the key for efficiency. If you manage your time properly, then not only efficiency goes up, and the satisfactory feelings for both clients and your staff would go up as well, because we just want to see a real picture, very much like the election, right? And we just want to see the real count, and we don't care who feels like they're gonna win, but we want to see the real count. So same thing in business, when you work with tangible intangible asset like people's talent, and you want time management. So these are the four things, the four inputs I give you today related to efficiency. That is your source of free money. And don't look down on efficiency. And the way to get big help on knowing which part I am not efficient. Sometimes if you are the person in the business and it's just like it is your child, and you don't want to hear anybody saying something wrong with your child, and you don't even see anything wrong with your child. You're so protective of your child, there's no way you're going to bring change to your business. But if you engage people like community CPA and like myself, and I have clients who actually wanted me to do nothing but going into their business and just sit there for a day and tell me what you think. And I have done that numerous times. And there was not even one time I don't have a very important change need to put in place. There was one computer technology company, and they're busy, but you know the owner's just not making it, and that's their last solution. So they had me going into the business for 3 months. The last solution is that if I don't come up with something that will turn the business around, they will close the business. So I guess I went in 3 months. You know what I discovered after all? And what I discovered is the operation, the people, the time, everything is good. The thing that is not working is their price was was quote too low. So the organization had a long history. So when IT business started taking up, and they were still following their comfort for the pricing, they did not go up on the pricing in order to cover their talent, in order to cover their time. So we need to raise price by literally 30%. And you guess what? We raised the price, lose zero customer, business made money immediately next quarter. So this is where you needed a business advisory service when you get to that level. And when you feel like you got a perfect child, but the child is just not behaving the way you want it, this is where you need that professional advisory service. And on the professional advisory service side, community CPA, we offer tax planning, tax saving advisory service, and we offer operational efficiency advisory service. So where we go to manufacturers, we look at their processing line and assembling line, and to understand where they're going with, you know, in terms of efficiency. Floor efficiency is so important. So we look at that, and then we also do internal control advisory service. Some company, and in the end, what we discovered is that someone is stealing money. Okay, we have a business and doing really good business, and they're contractors for the cities and the counties, and they have money coming in, but they just don't make it. And the lady in the office has been with the business for 15 years. The owner trusts this person. And at one time, I asked the owner, and I actually asked the owner about how this person is on the phone, not realizing that he was on the speaker. So anyway, so I asked how this person is, and whether he felt this person has something to do with all these excessive laws that we have. And of course, so the person heard it. And the next thing I know, we got fired. And so our firm is no longer their service provider. But within a year time, the owner called back and asked me whether I remember I said something about this. And I said, of course I do. Then what he discovered is, and this person was creating a fake vendor and paying to this fake vendor about 50,000 a year, and on check. So the owner even signs it because the vendor has a name so kind of related to those vendors that the business owner was using. And that vendor was registered under her name, and it is her business. So obviously $50,000 a year profit was going into this vendor. And plus, she increased her salary without anybody knows. And of course, you know, if we, if if we really handled the internal control piece of the advisory service, we would know that she cannot be doing her, doing payroll and also, be able to to sign the payroll check because they have this pre-signed payroll checks there in the office because the owner is too busy and not always there. So those are the things when you have professional advisory service coming in and they will nail down things like that. We call that internal control advisory service. Then of course we also do audit service. And if your financial statement, you just don't know what's wrong and you just don't know why and whether your financial statement is done is properly, is accurate, you can hire our audit team to come in to audit your books and record. And that's if it is a closely held company like private company. And when we do audit and we have our focus on cash side of handling, internal control, and all of these and efficiency, so we can give you the data that you really should be within that range. It's just like a physical checkup. And if if your blood sugar is going out of the range and there's treatment for it. So if your operational efficiency is going out of range, and we give you answers how to do it. So with that, I hope this part 2 gives you some free thinking. And I know it's not going to solve your particular questions and issues, but at least opens up your mind so you can think outside of the box. And again, all our webinars are on YouTube channel, Community CPA. You can subscribe to the channel. We want our channel to be over 10 million, over 10,000 subscribers because we have more than 10,000 clients. Why not? We should have more than 10,000 subscribers. So subscribe to our channel and like our channel and continue to follow us. And our next Saturdays speaking here, I will be giving the free money part 3, which is the free money from government grants and money that coming out. By next Saturday, I think I will have more information related to PPP and the EITL loan. So hopefully the president-elect would already have some thoughts and already be on internet. And hopefully current President Trump would already, now election is over, so he can focus on getting the promises that he made to American people done before his term is gone, right? So we will see how things are developing, but obviously, and it doesn't matter what happens, American people are most important. So I think any decent person, whether it's going in or coming out, and would put American people first and put you and me first. And good to see you. Bye-bye.